Welcome to TradeTheNBI.com. This is John. This report is for the 5th of the month. And, well, as we started out, we ended up, again, same kind of weakness we were talking about. And again, looking at that ABM support coming down at the bottom here. And we got plenty of it. We had the short-term buyers pop back up again. It's going to be an interesting little confluence right here. Again, things appear to be soft. We still see plenty of support. No dip below the red line and actually staying right at that green line level, which gave us a little bit of juice for the little dip, and everyone came in to buy it back. But again, I think you just got to play the pivot at this particular point. We should start seeing fund money anytime start rolling in here towards the end of the week, and that certainly could have a significant impact. It just is really going to be a question on whether, I mean, there was talk about healthcare coming back again by this Friday. That seems unlikely, but if that were to happen, that would be a huge catalyst to drive things. NQ is just looking solid. This is exactly what it looked like in the mid-90s, where you had these just slow, steady, but it was just a constant rise, and it's people talk about the unusual nature of things. Like, no, this has all happened before. Nothing that crazy. Euro's still finding relative support, given the fact that we had a pretty decent short signal with the DOC spread, as well as that orange popping up way above the plus 13 line, and just no long-term or mid-term buyers really jumping into it. It's kind of stabilizing a little bit. There's just a lot of uncertainty as to, well, the Greece thing is going to start heating up here in another month or so, and then you're also going to have more talk on the Brit exit, but I think that's sort of stabilized things at this particular point. The discount's not as big as it should be, so there is room to go further should there be any upset or turmoil, and particularly if the U.S. starts to ramp up, and or even if interest rates rise, it will attract money elsewhere. Still way inflated on treasuries at this particular point, and strong push for oil, which is interesting. I mean, there's always going to be the drawdown, but it just becomes a supply issue where fine, you have OPEC pulling back on stuff, but there's a huge glut still. So forward looking, that just seems to be like a short trap covering right now, and probably another opportunity to short that going forward. And gold is going to continue to be the stellar outperformer, I think, probably on the year without any question. So it was interesting from the 5K standpoint. We ended up with our nice decaying off of the plus 13 that we had there, and the new EBM didn't reset until right over here as we started to work out some of the weakness. It was a little bit off the highs, but there were several other opportunities you could take. But it's like some of these we expect only to reach resistance levels and then retrace, and that's where these little number 5s come in and working out a setup with that, sort of like what the number 2s were as well, but clearing out even more of the things. And then the expectation with those will be that you don't expect as big a move. Fine, and then you can look to the resistance points, which would be like these typical 50% levels, where it's like, okay, once you come back below it, you got your opportunity to short, particularly if you're in a DOC spread, which, well, this one began way back. So it never cleared from the original short is really what happened. So there was never a change in that until we finally started to see some building back into the shakeout right here. And that was where this dipped down and gave the clear signal to buy there. It gave a second dip a little bit further up, right above the 61% number there, and then that rose to peaks, but at that point we started to get our lovely orange plus 13, and that was enough to give us a bit of a retrace. But again, if you think about it, from the top 100%, where did it go? Right back to the 50%, and moving back from the 50%. So it does the same things over and over, and you'll be able to see those patterns when you have it on there. If we reduce to 6 bars, we would end up with the high right here to the low, or something like 10 bars, and you'd be able to see the high to the low here would produce exactly that. So it'd be a little bit different, then it would be a much bigger retrace within it, but still, from a broader perspective, gives you a pretty good idea. And this is how we'll be able to incorporate that with the even if you don't have the fib levels on, it will still be read that way from a broader 50K standpoint. You can see it a little bit broader, had the similar kind of situation, and we've just kind of traded flat for the most part. It's been a slight rise going there. Just got to get above the higher 76% level. make up some of that ground. But again, this week shakeout has been the case for the last several days now, so the whole week pretty much. And that's not inconsequential because the daily also was soft as well. So all pretty much in line with our expectations for now. But I would expect in the next couple of days we're going to start to see that volatility spike a bit more because you're going to have a lot of different money at play. And if there are people that want to exit this market, that's how they're going to do it, into that liquidity. And so if we don't get much of a move, then I would think that we have a bigger short side potential going forward. So we'll play it by ear and see how that develops. And obviously the reading should give us a pretty clear idea. Trade well. We'll talk to you later.